Couple things to look at in real estate before you get happy and go out there and start hunting for homes. A lender told me, and it's been my practice since 1998, it's a really good idea to find out where you happen to be qualified. What does that number look like? And then take whatever other costs there might be with a residence. That has to be market and location and maybe even neighborhood specific, what other costs to include in your mortgage. This is what I mean. So let's say you go into an area, and in Santa Clarita Valley, we have several that might carry Mello-Roos. It's an additional tax on the property. That number can get pretty big. In Los Angeles County, to give you an idea, a typical real estate property tax base is 1.25%. That's going to be 1.25% of the actual value of the home. That's the assessed value. So let's say you're buying $1 million property, one with 6 zeros $1 million property. And let's say it falls within that normal tax rate of 1.25% because it's in Los Angeles County. What's going to end up happening is when you break that down into a percentage every year, your property taxes, if it is 1.25%, is going to be $12,500 if you buy $1 million property. That's the assessed value. And it doesn't matter if you pick up $1 million property and the previous owner, and this is where you have to be careful online, maybe the previous owner had it paid off, or maybe the assessed value on it was $250,000 or $300,000. In some cases, some counties miss the reassessment as years go on. Now, whenever the economy gets in a financial hardship, it seems like they're much more better at getting those assessed values updated all across the board. But for example, if you're looking at property taxes that are currently on a property, understand that those might differ very much from what you're going to be paying. You might be at a different rate altogether. And in some cases, there are some benefits to maybe taking a property tax rate or assessed value from one property to another, depending on age. And there's certain circumstances where that could happen. So for your understanding, it's much better to look at that particular tax rate in an area and then factor it in. That's part of the approval process. So in Santa Clarita Valley, there are certain residences that carry even higher taxes than that. They're called Mello-Roos. They're special assessment type taxes, basically that they pay for the infrastructure of where these houses happen to be. And it's because the builder themselves didn't pay for it. In some cases, like Toll Brothers, I'll give you a good example. I happen to like Toll Brothers. They do pay for most of the Mello-Roos before they actually start building residences. At least that's what I've seen lately for the last several years. In some cases, in the future, maybe they will not. But some other new home builders, when they're building brand new residences, they don't want to pay that up front. They would rather pass that cost on to the consumer. That being the case, you might have an additional 0.5% or up to 1% or maybe even more of Mello-Roos tax. So if we come back and look at that Los Angeles County property with that tax base of 1.25%, and let's say that was double, you're going to be paying, instead of $12,500, you're going to be paying $25,000 a year for the actual property taxes on that property. So it is a big difference. So when you go get approved or pre-approved for a loan, these are factors that you're going to be looking at. Of course, it's going to be very much house dependent. Also, something else that you might want to tack on or need to tack on would be homeowners association dues. Now, some people say, well, homeowners, I don't want to buy a house with homeowners association. I get that. There are some benefits to having a residence with an HOA or homeowners association. Maybe they're a really good enforcer. Maybe your neighbor wants to come and totally paint the house horribly and make all your friends laugh at you. Maybe that's a reason to have a homeowners association, because they have an enforcement mechanism. Maybe your neighbor wants to bring in 53 cats. Maybe within the homeowners association, they say you can't have more than 2 or 3 cats. These are all rules based in what's known as CC&Rs, covenants, conditions, and restrictions, CC&Rs. So in that particular case, maybe they won't allow for that. Maybe they don't allow for particular dog type breeds. There's a lot of things that a homeowners association can enforce, and that might be helpful to you. On the other side of it, in some homeowners associations, we really don't know what they do. They really don't pay for anything, as it would seem. It just doesn't seem to really do much of anything, and some of them can be quite expensive. Whether you buy into those areas or not, that's up to you, and you should do your due diligence and get those questions directly from the source, not your agent, not the lender, but call the homeowners association and the property management company, or if there is some kind of a direct contact with the HOA, call them up and say, hey, listen, thinking about buying in this area, what exactly do you people do? Hopefully they'll answer your question. And it might not be as easy as just calling them up and having them pick up the phone. They might be able to invite you to some kind of a board meeting for the HOA if it happens to be handled at a local level. If it's handled more globally, which would be via some kind of a property management company, and that's all they do is they manage these properties and basically act as the HOA, maybe you can get some different answers there. Whatever answers you happen to get, though, especially if they're going to have to do with you buying a property and living there for any amount of time, financing all this money, and then buying a property, make sure you know what they're going to provide. And if they're giving it to you verbally, see if you can find out how to get that in writing. Maybe you can follow it up with an email. Say, hey, listen, talked to you earlier today, Jack. You're wonderful. I appreciate all the information. You said it was okay if I had 53 pit bulls at the property. Just wanted to make sure I heard you correctly, and have them verify that in writing, just in case you're catching that person on their last day. They hate the place and they can't wait to get out, and they'll do anything but burning it down and going to jail just to make their reputation soiled. There's that. So know your cost. That's important. In addition to that, whenever you are looking to get pre-approved to purchase a residence, that cost of what that's going to be with regard to the lender is kind of important. I did another video earlier talking about some of the reasons to do your shopping, of course, and you'll want to talk to people just like when you're choosing a real estate agent. You know, which one's going to make the most sense? How do you feel when you talk to them? Are they all about just selling you right now, or are they going to take the time to explain things to you? Whenever I encounter anyone at one of our open houses, we are, of course, Santa Clarita openhouses.com. Anyway, when I encounter somebody, my question typically is, has anybody walked you through the market? Has anybody talked to you about the market dynamics, what's happening, what's going on out there, how you can best prepare, and what to look for as you're starting your real estate home buying journey? And a lot of times, no. So I'll set up a Zoom meeting. We'll sit, we'll talk, and I'll go through all these steps, including the importance of getting pre-approved for a mortgage. Now, with you talking to a lender, some of the questions that come up is, well, where should I get the lender? If you have your own bank, that's not a bad start. Understand, though, the process is most people are going to want to run your credit. In fact, a lot of people are not really going to want to do anything else until they get your credit ran. Why is that? Well, they kind of get their hooks into you a little bit when they run your credit, but also running your credit is a very necessary part of becoming approved. However, when you get your credit run repeatedly because you're shopping around for a loan, that might not be super helpful for your credit rating because of the multiple inquiries. There's ways to fix that. But again, you might want to best prepare before you give up all of your personal information to somebody and getting pre-approved for a mortgage. Having said that, it's not unusual to shop around. Some of the places you can go, like I said, your own bank. You can go to a credit union if you have a membership there. Usually, at least what I've seen from my experience, credit unions aren't great at the new loans for a residence. Usually they're very good at refi because there's not many moving parts there. Typically with a credit union, the nimbleness of the members' agents, the lending agents on that end, usually it lacks a little bit because they're just not able to call back during weekends, on holidays, after hours. Usually you won't even have their cell phone. You're communicating only through work. And you're like, well, Connor, buying a house is really dependent on escrow, lending, and real estate agents. And a lot of that business operation takes place Monday through Friday, 9 to 5. Yes, that's very true. But Saturday night, after you've been looking at properties all day long, you find one. Your agent takes you to one that there might be some negotiation ability on the price. But maybe it's about $3,000 or $4,000 more than you can actually than you've actually been approved for. It might not be a bad idea to ask the question. Or maybe you were like, you know what, I don't want an HOA, but there was a couple properties that you saw that have an HOA, so you want to get that factored in as well. Maybe that's something else you're going to need to speak with a lender about. Maybe you're out hunting properties and your uncle came with you and he says, I'd like to give you that $300,000 I have in my mattress so it'll help you and your little missy get on with your home buying experience. That's something else you might want to talk to the lender about, especially if you're going to be making an offer with that obligation of you needing to bring in more money than you've already talked to your lender about. Whenever it's a hot market and there's a lot of activity on properties, multiple buyers looking at properties at the same time, everybody writing offers, for example, you're going to need answers to your questions so you can at least be part of that game. So you can get that offer in there and best represented, have those answers to your questions. And in some cases, when you're working with non-local people, you're working with the lenders that you saw on late night television, or you're working with the ones that are part of big banks and credit unions, you're not going to be able to get the answers to your questions that you're going to need. Interstage left the mortgage broker. Typically, mortgage brokers are going to give you their telephone number. You're going to have their cell phone. You're going to have their email. They're going to probably text back and forth with you. More than likely, the mortgage broker is going to come from your agent as the source. Now, that's because your agent knows them. It's illegal for kickbacks and all that other fancy stuff. So realistically, it's going to be a control issue. Your agent's going to be able to say, hey, listen, buyer's not happy. I referred them to you. Can you please help them become happy again? Little things like that do really help the process. Also having kind of a pecking order, if you will, it doesn't hurt. And it's the same way if you happen to go to a lender, they refer you to an agent, which I don't think ever happens. But mostly agents refer their buyers to lenders. Now, the lenders are going to be talking with their client. They should be talking nice. They should back up everything that they're saying in some kind of an email or written form. If you're dealing with a real estate agent or a lender during the pre-qualification process and they're telling you things that sound funny or maybe you're unsure of, definitely follow up with them in an email and say, hey, listen, just to make sure I understand our earlier conversation, I wanted to make sure that it is true that you're going to be dressing as Pegasus with a horn, which would actually be a unicorn, but I just wanted to make sure I heard you correctly, or whatever it may be. At that point, then your agent should come back in an email where you can verify what they in fact told you was as you understood it. That's of critical importance, whether you're buying a house or selling a house, whatever it may be. Make sure you get that follow-up done. Don't feel ashamed. They used to say there is no such thing as a dumb question. I don't agree with that necessarily. I've heard some pretty dumb questions in my time. But when it comes to you and your pocketbook and your money, there is no such thing as a dumb question. So you fire that off immediately. And what I would do is I would include your agent on it. That's something that's rarely done. I've had things just almost go really bad whenever, and not maybe because I referred to the lender, but if they would have just included me, I could have jumped in and say, I'm sorry, I know you're not my lender, but you're working with my client because their uncle referred you. And what you're saying is complete utter nonsense, or what you're saying is ridiculous, or you know what, I don't think that they should be switching from a 30-year fixed to an adjustable rate mortgage because that's one of the things that they didn't want to do in the first place. How is it you're selling this to them? Now, maybe there's the reason. Maybe the client likes that adjustable rate mortgage. Maybe they want a loan with a balloon payment. Maybe whatever. But at least that keeps me in the loop and I'm able to say things as any good agent would, especially because we went through that last market and a lot of those issues were because of these very interesting mortgages that were being issued, being sold, and people were going out there and financing real estate with very little proof of their wherewithal to be able to make those payments. Real estate's not that way anymore. There's a lot of checks and balances. Going back to that pre-approval process, I would definitely want to get in writing what people are promising you. In addition, and finality, I would say this. Whenever you're talking to real estate lenders, whenever you're getting pre-approved, after they package everything, a property has the potential of offering, whether it's extra taxes, whether it's a homeowners association, whether it's some kind of other charge, then you're going to know where you stand. Then you're going to be able to make better decisions. And then the agent that's doing the searching for you, as you're probably going to be doing your own due diligence, but the agent, as they're looking for properties, will be able to vet those properties that have whichever criteria you want. One of the things that I will say in closing, just reminding you of before when I was talking about emailing folks back and forth, finding out if in fact you understood what they were saying. When it comes to any due diligence, let's say you want to talk to the homeowners association because you have a whole bunch of cats, as we talked about, or a whole bunch of dogs, or you're moving into an area that might have some kind of senior conditions. Maybe it's a 55 and older community, and you're going to have your niece staying with you for 2 months out of the year. You got to find out if that's going to work out. You need to ask those questions, and don't ask your agent. We have a vesting in this thing. Of course, an agent shouldn't lie and say, well, don't you worry about it, Tom. It's going to be just fine. It's going to be liquid gold for you. Anyway, some agents are going to be that way, but just so you know, I would follow it up myself, contacting the homeowners association, contacting the school board, contacting whatever it is that's going to impact my living. If I have kids that are going to go to school, I want to make sure they're going to be going to a school that I want. It could be that those school boundaries are off or different, or for some reason exclude your property. So your kids are now going to have to be, instead of walking to school down the street, they have to go somewhere else. Make sure you back all that stuff up in writing before you actually pull the trigger. We should say press the trigger, because pulling could indicate left or right. Press the trigger on any real estate. Make sure that you do that due diligence and do it yourself. I know, what are agents good for? Well, they're really good at negotiating, keeping the contract safe, following timelines, and also answering a lot of those questions. But when it comes down to stuff that's coming from other entities that are going to have some kind of control over your happiness in a property, I wouldn't leave that up to anybody but myself. I would definitely want to call and find out, hey, listen, I'm moving into the area. I have a house located at this address. I just want to make sure my kids are really going to be going to your school. And they say, oh, sure, no problem. They're going to be in like Flynn. I want to make sure that's happening in writing. And then, so can I get your email address just so I can verify with you at a later date, after I talk to my wife, my husband, my significant other, my God, my source, my Kool-Aid person, whatever it may be. At least you'll be able to give that to them, fire off an email and say, thank you, Sally, very much. We talked earlier. I just wanted to make sure I'm buying a house at 1234 Anywhere Street. And I wanted to make sure my little Julia and little Johnny are going to be able to go to your school. One's 8 and one's 12. Is that going to be okay? Do I fit within that boundary? And what else do you need from me? Something of that nature. All right, this has been just a little bit of what I talk to people about. And this is only on the loan side. I don't loan money. I don't have anything to do with lending. I'm not one of those real estate brokerages that have my own lenders that in my pocket. I don't have a wife that does that or whatever it may be. I like to leave the lenders to those people. And some people do both. Some people will sell real estate and lend both all day long. Me, I like to do the real estate end of it, residential real estate. And some lenders just like to do the lending part of it. And that's who I like to work with. All right, everybody. Thank you so much for watching. You can see more at Santa Clarita openhouses.com. I'm Connor with Honor. We will see you in the next one. Thanks for watching.